Hello, I'm Sandra from MyDubaiMyCity.com, and today I'm with Peter Cooper, the editor of ArabianMoney.net. We're at Dubai Trade Center at the Dubai Financial Markets, and today we're going to be learning how to buy stocks and how to trade in the markets, right, Peter?
Yes, indeed. Yeah.
So, shall we start?
Okay.
Yeah? What do we do first?
Well, let's have a look at the actual market itself first. I mean,
Okay.
here we are. This is downtown Dubai, the Dubai Financial Market. It's been here since March 2000. That was when it was first opened. And all you do really to get going with buying stocks is to register over here.
Okay.
And then you can just go in there with your investor number, go to any of the counters, and you can buy stocks over the counter there.
Okay.
And pay in pretty much immediately. So, I mean, this is where you'd register if you want
Okay.
to become a share owner in Dubai. You just bring your passport down here and get a personal identification number.
Okay.
Then you can buy from any of these brokers here.
All right, so this is the trading floor, and you have different brokers all around.
That's right.
Okay.
And the gentlemen you see sat down there, professional day traders. They sort of sit here perhaps most of the day and buy and sell stocks in the individual session.
Okay.
But for people who want to own stocks for a longer time,
Yeah.
this is the place to come, and you just buy at one of these windows.
And what do you have to keep in mind? Like, for example, if you're buying, what are the basic tips, or for a beginner?
Well, the most important thing, of course, is to buy when the stock market is relatively low,
Right.
and then remember to sell when it gets high. A lot of people do it the other way around, and they come in far too late when prices have gone up. I mean, even today, it might not be the right time. That, of course, is the judgment of the individual. But if you want to own shares in companies in a place like Dubai, over time you're going to see, you're going to get development there because profits are rising. It's a trading centre, and we are at a 7-year low, or we have been recently. So there's quite a lot of room for share prices to rise. But of course, they may not do it immediately. You might have to wait and be patient.
So, for example, suppose I wanted to buy a couple of shares. Would you recommend I buy stocks of one company or several companies, like a nice mix?
Well, it depends how much you want to invest, really. If you're not investing a great deal of money, then it makes sense just to have, a few shares in one company. But otherwise, you should be diversifying your portfolio to reduce the risk of being stuck in one particular stock that may not do as well as the others.
So, for a beginner, what is, for example, if you say the index is currently at 1668, what does that mean exactly, and how do you get this? How is this number derived?
That is an index of all the shares in the stock market. So it's giving you some kind of average across all the different shares. It'll be weighted according to the size of the company.
Okay.
And that gives you an indication on a day how far the market has moved.
Okay.
So you go up and down by so many % of the index.
Okay, so it's just an average of all the stocks.
Basically, yeah.
Okay, so do you remember the last time there was a boom? Because for a while now, the markets have been pretty subdued.
Yes, I remember 2005 very well. It was a very exciting time for the stock market. Things really took off, and we were the best performing stock market in the world that year. It was just unfortunate, if you go that high, there's only one way to go the next year. And then it was the sort of worst performing market in the world. So what goes up must come down. And that's something for investors to remember, that the pattern of stock markets is that there's a rush of enthusiasm, people get carried away, and prices can go up to very high levels, but they don't stay there, because as soon as you get sellers in the market, the prices begin to fall.
So it's actually pretty logical and pretty basic. When the prices are low, you buy, and when they're higher, you sell it off.
Yes, it's strange. People always seem to do the reverse in stock markets.
Okay.
You wouldn't do that in a supermarket. Go and buy when prices are high, and not when they were low. But you need to get that basic investment
principle or rule.
Moving in the right direction for you.
Okay, great. Thank you so much for your time, Peter, and we'll do another tutorial in the next few weeks.
Okay.
Thank you.